Is Seattle housing market finally cooling off? Or are we just catching a breath before the next big wave?
Big waves, big waves.
Whether you're buying, selling, or just watching from the sidelines, this update will tell you exactly where the market is right now and where it is heading for the rest of 2025. Hi, I'm Groshans. I'm a realtor and mortgage loan officer, helping first-time home buyers, investors, and professionals navigating home buying, selling, and getting a mortgage with confidence. Today, we are diving into Seattle's housing market for May and June 2025. We'll break down what's happening, why it matters, and what it means for you. So let's start with the three big indicators shaping the Seattle market: sales intensity, inventory levels, and interest rate. First, let's talk about sales activity in our market. In June, 44.6% of homes went under contract in the first 30 days. That's strong. It dipped from May's 50.1%, but it still shows we are in a competitive market. Think of it like this. We have gone from sprint frenzy mode to more balanced market, but it's still fast-paced. Next, let's discuss interest rate. In June, average mortgage rates hit 6.95%. It's slightly up from May's 6.81%, stay hovering in that uncomfortable but manageable zone. We don't expect any big rate drop until late 2025. So if you're buying this year, plan for the rates stay between 6.5 to 7% range. Now, let's look at our inventory levels. We reached 2.5 months of inventory in June. That's the highest level since before the pandemic. In May, it was 2.1 months. So yes, buyers have a little bit more negotiation power, but we are still in a seller's market. And in order to become in the balanced market, we need 3 to 4 months of inventory. So we are not there yet. Let's talk about market activity. In June, homes are average about 25 days on the market, and it's slightly up from May's 23 days. It now takes about 12 showings to go penny. It went down from 14 showings in May. That tells us the pace is still strong, just not as intense as earlier in spring. We saw 970 homes go penny and 834 closed sales, with a total of 2,917 homes for sale in June. Now, let's talk about pricing. The median residential resale price from Seattle in June was $915,000. That's an 8% jump from May's $865,000. Price increased 3.7% from last year. Homes are still selling for the list price. It means good properties are still seeing competition. According to Northwest MLS data and industry reports that tracking the Seattle housing market over the past 5 years, Seattle home values are up 24.1%, with single-family homes at 25.3% and condos up 22.7%. We can also break down across different types of properties. For condos, June's average sales price was $683,180. They are selling at 99.5% of list price. But the condo market has been missed. Prices dropped sharply in May, and inventory is growing, especially in downtown Seattle. Once supply reached 6.9 months, it puts buyers in control. In contrast, Seattle Northwest area is still a seller's market with just 2.5 months of condo supply. For the new construction, average price was $965,522. Bidders are offering incentives like rate buy-down options and appliance package to attract more buyers. If you're in the market for new builds, you may have negotiating power right now. For the luxury market, Seattle's top 5% of homes are priced around $3.25 million. This figure is 4.3% up from last year. Luxury homes are holding their value, but we have seen a slowdown in activity, with 12% fewer luxury homes going under contract nationwide in April. In Seattle, we still have low supply and it keeps prices more stable. Let's talk about affordability. Seattle's median rent in March was $2,026. up 1.9% year over year. That makes us the 16th the most expensive rental market in the country. So if you're planning to stay in Seattle for 3 or more years, buying may be the smarter choice. You build equity, lock in an interest rate, and avoid rising rents. Now, what's really driving the Seattle market? We have a strong economy, powered by tech giants like Amazon and Microsoft. Population growth. Seattle just passed 800,000 residents. Tighter housing supply due to the zoning law and high construction costs and geographic constraints. And infrastructure growth, for example, like light rail expansions and mixed-use development. All of these things keep our market's demand high, even with today's higher prices and rates. So, what's the outlook for 2025? For buyers, there are more choices now than last year, but the best homes under $1.25 million stay move fast. You need to be pre-approved and ready to act if you're planning to buy this year. And you should also consider using rate buy-downs to manage your monthly payments. For seller, the markets remain strong, especially for homes under 1.5 million. But smart pricing, great presentation, and good marketing really matter now. Offering incentive may attract more buyers than price drops. And listing in the late spring to early summer give you a head start before the inventory rises in the late summer. So, what's next for you? If you're thinking about buying, selling, or just want to run the numbers, let's talk. I'm here to help you navigate this market the smart way. If you found this video helpful, hit the like button and subscribe to my channel. And drop your questions in the comments. I personally reply to everyone. Thank you for watching. I'm Win, your real estate and mortgage expert, and I will see you in the next video.